Hey everybody, I'm Gary Palmer Jr., you're you, and together we are Minting Coins, your trusted source for crypto news, interviews, and ICO reviews. Thank you for showing up. Tap that like button, subscribe if you haven't subscribed already, and feel free to comment as we get into what is happening today. So just very, very excited to be back in the studio, back making videos with the screen and the camera. We definitely like the videos that we're making in the backyard and out and about, just getting some content out there, getting some thoughts off of our mind, and really appreciate all of the scores and scores of people who are just out there helping us, by liking the videos, supporting us, sending us awesome emails and connections, and it really means a lot. This is really helpful to go over the news for ourselves and to share this information with the people that are closest to us, and then with this YouTube channel, with developing this content, with sharing this content, it's really great sharing it with anybody who wants to listen, because we just want everyone to know about this. We want everyone to learn about this with us, and the fact remains is that you never get 100% of everybody on board with any one thing. There's always going to be people who are lagging behind. There's going to be the late majority, the people who never want to convert over, and we all know them in our lives. We have people who refuse to use email, people who refuse to use text messages, people who refuse to use the internet in varying degrees, and we're going to have people who are going to refuse to use blockchain, digital currency, distributed, decentralized technology, because it's going to be new and because it's going to be different. And this is why when people talk about the game-changing applications of this blockchain technology, it's going to be in such a way that people aren't even going to realize that they're using blockchain. There's going to be some sort of killer app. It's going to be a game or a utility, something that people are going to be able to use. It's going to be very simple, and somehow it's going to use blockchain technology so that information that it's sharing between all the different users is not going to be required upon a third party. And when that happens and people start telling their friends about it, and they're telling their friends about it because it's fun, and they don't even realize it uses blockchain, if you see that happen, when we see that happen and we share that with you, then that's going to be a huge indicator that someone is doing something right, and whatever token, whatever platform that technology is based off, they're probably going to get a huge bump if they get the number of users to increase behind their platform, behind their technology, behind their product or service. Because when we are looking at the value and we're trying to predict the risk and the reward or the future potential of any communications network, we could be talking about fax machines and cell phones, or we could be talking about the internet or Google or Facebook, or we could be talking about any sort of website or system. The value of that network is going to be the number of users who are communicating on that network squared. And so we have a certain number of people in the world, and that seems to be increasing. We have a certain number of organizations, for-profit, non-for-profit, small businesses, large enterprises, and the number of those entities are continuing to increase in the world. And then we also have this other technology that's with blockchain with us on the precipice of this fourth industrial revolution, and that is the Internet of Things, IoT technology. And that incorporates with AI, artificial intelligence, and all of these internet-connected devices. Doesn't matter if it's a cell phone or a toothbrush, with Wi-Fi, or any sort of Wi-Fi connected device that currently exists or will exist in the future. Those are additional users who would be counted in the value of this network. So as more people, organizations, and devices come online, and they are connected with these cryptographic ledgers, these cryptographic tokens, and more of these, living and non-living entities are using Bitcoin or blockchain or Ethereum, then the greater the value that network is going to be to all the users of that network and society as a whole. And jumping over to the market, taking a peek at what's happening over there at coinmarketcap.com, we see that the price has huge fluctuation. And we've said this a couple times before in the past couple of videos, and the product does not equal the price. The price is the market. The market is usually a lagging indicator of the information. At least on average, it's a lagging indicator. And so once the users start coming on board, once the potential starts getting seen, and once the value of the product gets recognized, then people are going to realize that the utility of the token is going to be much greater. And then we start to see these values go up over time exponentially, which is what we have seen with blockchain, what we continue to expect to see with Bitcoin, and could happen with a lot of these other early mover technologies as well, like Ethereum, for example, or EOS, and some of the others. Real quick, going over some high-level news headlines. We had FINRA, and FINRA is the financial organization in the United States that really oversees the investment advice and the professionals who are sharing securities information, and they really have a lot of say. They have a huge amount of authority in terms of creating rules and regulations across the United States, which really affects everybody across the entire world. And so FINRA is putting people at unease over the SAFT agreement. And so this is the SAFT agreement used for tokens as securities. It was a framework used for ICOs and for ICOs to offer tokens for sale to non-accredited investors, just everyday people like you and I. And the FINRA, the Financial Industry Regulatory Authority, is coming back and saying that the SAFT agreement, the SAFE agreement, is not going to add protection simply because that these lawyers and these executives have put this agreement in place. And so specifically what this statement reads from FINRA is that they say, know that investing in a SAFT contract does not mean that the offering is safe or compliant with applicable federal and state laws. No matter what a company says about the ability of a token to change characteristics from a security to a non-security, there is no guarantee that the SEC or the courts would agree with the company's assessment. The statement goes on to say that the determination of whether something is a security is based on facts and circumstances that come out during the analysis, and simply having these titles and these agreements don't go on to say that. So the SAFT agreement, which has been used for practically every single non-accredited ICO out there, is a simple agreement for future token sales. And and so if this is out there, if you're a part of an ICO, if you're looking at this agreement, then you really need to go deeper into what you're doing, what this organization is doing, let it be it's your organization or an organization that you want to invest into. We need to recognize that there is just an increased amount of regulatory attention coming into the blockchain space, the cryptocurrency space, the tokenized token space. It doesn't matter if we're talking about a security token or a utility token. Every single one of these are going to be looked at on a case-by-case basis, reviewed by the SEC, FINRA, and federal courts to really see who has broken what laws. And if you don't escape, that escape velocity of being able to create a company and have the money and the backing behind you to protect, what you've built up to this point under this sort of foundation, your company, no matter how you slice it, is just going to be at risk. It's happened in so many other cases before, where, I think Pizza Hut did this thing where, Pizza Hut was giving pieces of their company, pieces of shares of stock to people as sort of a rewards token coupon for those who purchased pizza. You were getting securities, gifted to you, sort of like an airdrop, if you were buying pizza. and that was against the SEC guidelines. The way that these companies were sharing value is similar then to how companies are sharing value now with ICOs, with airdrops, with these different, on one hand schemes and other hand loops that people are trying to break through. So the last thing that I'll just say about all this is that with all the scrutiny that these ICOs and these new coins and tokens are going to be receiving because they're being created essentially out of thin air by most of the time companies and platforms and applications that don't already exist, they're going to have to deal with a lot of these issues. You're going to have to spend a lot of time and money appeasing, the regulators and the laws to make sure that they're not breaking any laws either in the past or moving forward. And if anyone is getting into Bitcoin and Ethereum, you're not going to have this issue with Bitcoin and Ethereum. There's not any one person or organization that runs these open blockchains, especially because they've existed for so long and propagated throughout our society that they're just at a level of decentralization where there's nobody that the regulators can really turn to have them fix a problem or course correct or anything like that. And so, at a high level, the high coins, the high market cap, decentralized coins like Bitcoin and Ethereum are going to have the least risk, and all of these others, not only are they, probably not going to survive the coming, what do we call it, crypto bust, where the majority of tokens go to zero or practically zero. They also have all this other baggage with them as well. So it's another reason to really stick with the open blockchains primarily. Also in the news from Bitcoinist.com, there's been a lot of issues that people are having with Coinbase, with BitPay processing their Bitcoin payments. And now it's really interesting to note that merchants can now use a Bitcoin full node to process their own payments via the BTCpay Server. And where previously it was about $60+ a month, it can now be done for less than $6 a month. And you could have the Bitcoin full node BTCpay direct connect to be able to accept Bitcoin for your products or your services. And you can do this with or without the Lightning Network functionality. Now, this is really, really interesting because there's a lot happening in the space, not just with Bitcoin and Bitcoin's blockchain technology, but there's a lot happening with the geopolitical politics surrounding this technology, with things that are going to be happening that we don't even know about yet, things that are going to be happening that we have some idea about. Again, we said this before, but once the federal dollar turns into a crypto dollar, turns into a Fed coin, the market cap of the Fed coin is going to be instantly greater than the market cap of Bitcoin. At least in the short term, that's going to be the case. There's going to be all this crazy stuff happening. And so while BTCpay is a huge option that's available right now, the full service, the full functionality of what it's going to do, what it's really going to be capable of delivering in terms of the scale and the usability for an everyday user, it's just going to be, probably a couple of years away, even though you could be an early adopter now and you could have a direct connection with the Bitcoin blockchain and accepting Bitcoin at your location, either physically or online. This is interesting to note that this article goes on to say that if tomorrow the US government bans Bitcoin, or that using Bitcoin becomes suddenly offensive or unpatriotic, which they're saying will happen when the proverbial S hits the fan, then merchants who are using BTCpay with Microsoft Azure are going to have all their accounts shut down, because Microsoft Azure is a centralized location of servers, and if you're running a decentralized application through a centralized vector point of attack, then all of those accounts are, would be shut off by Microsoft, and all of the people who are running on Azure would, lose their systems. This would hurt them specifically. This would hurt the ecosystem as a whole. So the more people who are more decentralized sooner will not only give themselves greater strength moving forward, but it's also going to help the entire network as well moving forward. All right, so tell me what you think about this video's content and what we've gone over today. Let me know, what do you think about you getting involved in Bitcoin now at this stage of the game? What do you think about purchasing into Bitcoin and Ethereum versus purchasing into all of these ICOs of yesterday, or the up and coming ICOs, which are gonna, kick into full gear as soon as the bull market starts to rear its head around? Do you think that FINRA and the SEC are really throwing so much regulation around this blockchain and ICO stuff because they want to make sure that when tokenization starts at a mass level and all companies around the world, all companies around the United States are tokenizing their existing stocks, their existing companies, their existing, financial vehicles, services, or even their utilities. FINRA and the SEC, they probably want to make sure that everything is done, to their standards and really benefits the existing systems and the existing players that are already on top of that hill. At the same time, it really feeds into what's happening with BTCpay and people's ability to directly connect with blockchain technology. So I guess my question for you is, are you directly connecting with Bitcoin and blockchain technology? Are you running a full node? Do you have a decentralized hardware wallet like a Trezor or a Ledger Nano S? Or are you just in the game for speculation? If you're watching this channel, you're probably here for more than just dollar signs, and you're probably here because you recognize the huge potential that this technology has to change the world, and to change the world for the better. But just keep in mind that this technology can also be used for nefarious purposes as well. And so how the future is going to play out is really going to be determined by the number of users who are involved in blockchain technology, who really care about the meaning of its application, why it's new and different, and keeping blockchain weird, keeping blockchain decentralized, and keeping blockchain peer-to-peer with as few intermediary third-party middlemen as possible. So with that being said, thanks for showing up. Tap that like button, subscribe if you haven't subscribed already, and hit that bell icon notification. We really appreciate your support. We couldn't do this, or maybe wouldn't want to do this without you, even with all the censorship that we've had and copycats out there, which have really hurt the brand and the visibility of minting coins on YouTube. We really appreciate you being here, you sticking around, and until next time, I'm glad that together we are minting coins.